Right, good evening, everybody, and welcome. My name's Tim Graham, General Manager at Hotspotting, and it's great to have you all here tonight for tonight's webinar, Ahead of the Herd. In a market that's moving fast, the smartest investors aren't always following the crowd. They're getting in front of it. And tonight is all about showing you how to do just that. By combining predictive data insights, cutting-edge technology, and proven negotiation tactics to make you more confident and profitable decisions. I've got two fantastic guests lined up who will each bring a unique perspective on how to stay ahead in this environment. We did initially have three. Small change to tonight's proceedings. We did have Terry Ryder, the founder at Hotspotting, as our main presenter for this evening. Unfortunately, he's come down unwell today, so he's not able to attend tonight, but he has shared with me his presentation deck, and I'll make the first apology for tonight. I'll be doing that presentation for him, and I will be reading that as I'm actually seeing it for the first time. So you'll have to bear with me for the first 40 minutes. I will do my best to get through it, and I am across most of the content. So hopefully it's at least 50% of what Terry might do. I can't promise to be 100%, but hopefully the content is still well received. Next, we'll hear from Jo Agresta, founder of Abodey. Jo and her team have been transforming the way buyers search for and secure property. She uses real AI and real-time data from sources like PropTrack, Landchecker, and the ABS, and Abodey actually matches buyers with the right homes faster and more accurately than ever before. Jo's going to demonstrate how this technology reduces stress, builds confidence, and ultimately improves outcomes for everyday Australians. And then finally, we'll be joined by Scott Aggett, founder of Green Shoots Property and one of Australia's most experienced deal makers. He's got more than 4,000 transactions under his belt. Scott specialises in helping buyers become truly buyer ready, knowing how to prepare, when to strike, and how to negotiate with confidence. He's going to walk through what it takes to secure the right property in a competitive market. And I can tell you, we recently interviewed him on our Ticker TV show, and he certainly had the best ratings and the best viewership that we've ever had. So stick around for that one. You won't be disappointed. As always, this is going to be an interactive session, so please feel free to use the Q&A function throughout the presentation. We have got Chris in the background who'll be monitoring that. If there's things that are prominent at the time, we will try to address them at the end of every session. Otherwise, we'll try to leave a little bit of room at the end of the session. And then, we'll try to get as many questions answered as possible. So without further ado, I'm going to bring up Terry's presentation, and I'll do my best to deliver it as well as he would. We'll see how we go. Alrighty, so tonight's presentation, Ahead of the Herd, understanding the key data for future hotspots. The agenda for this evening, so we're here to look at the problem. The problem is that most data discusses the past. Most real estate analysts actually have a rear view mirror and look at real estate data in isolation. And where I suppose hotspotting is quite different is we don't just look at real estate data, we combine that with economic data, we look at population trends, major projects in the way of infrastructure, and that's where we can create some forward-looking insights. So we're going to educate you a little about some of the algorithms and some of the prediction models that we actually use to predict the locations that are going to have the best long-term growth in the future. One of the things I want you to learn from tonight's session is that the only inevitable thing in real estate is change itself. And there's so many let's call them gurus out there that are actually talking about their formula. It's always this, it's always that. I only sell new build, I only sell Melbourne, I only look at this and I only look at that. The problem is when you have a formula like that is you don't actually account for change. And real estate and the trends in real estate are changing constantly. So actually having an open mind to seeing those trends will allow an investor to actually be on the forefront and actually be ahead of the herd. So one of the things I've touched on already is looking forward, identifying the data that actually helps you see what's going to happen in the future and not constantly look at what's been happening in the past, because one of the lessons you'll learn tonight is the past does not predict the future. Some of the things we're going to cover tonight are the new trends in real estate, things that haven't necessarily been the norm in the past, but are actually setting the way for the future ahead of us. One of the reasons we decided to create this webinar content around being ahead of the herd is because Terry and I do a lot of strategy sessions with both investors and obviously mortgage brokers and financial planners, etc., that are working with investors that say, look, I want to know, is now a good time to buy? And it's the wrong question. And the other question that we get asked all the time is, where's the best place to buy? And inevitably, every time we have these webinars, people say, "Oh, is Toowoomba a good place? Is Melbourne a good place to buy?" And the answer is that unless we actually know your exact situation, or unless your financial planner has drilled in, understood your goals, what's existing in your portfolio, what your appetite for risk is, what you need in the way of cash flow, these are the wrong questions. So it's important that when you think about your portfolio moving forward, or the investments you're about to make, you need to be asking the right questions. Some of the questions we'd love to be asked, but we never are, is what do I need to do before I start my search? What metrics can help me to find the best places to buy? And remember that those same places won't be the same for your next door neighbor or your friends or your family. Every location has different things for different people. And what's right for you could be completely wrong for the next person. So where can I go to get the right advice? Where can I go to get the right information? What data can I trust? And what data is actually just white noise? And these are some of the things we're going to cover tonight. So some of the things that we think about in real estate, and I've got to be honest, now compared to 5 years ago, investors, real estate brokers, real estate agents, and people that work in the industry have actually got more data at their fingertips than they ever had before. We've actually got information overload, and I'm sure a lot of people on this call tonight who might be out there trying to think about where the next place to buy is, might even suffer from things like procrastination because they've got too much information to actually be able to make a decision. And this is one of the challenges when you have so much information and so many different people giving you different opinions on what's right and what's wrong. So data can be interesting, even fascinating at times, but most of the time it's rearview mirror. And if I was to take a step back in time and say, and I get this all the time when we talk to our customers, or we talk to consumers and real estate professionals, and we say this is a market that we think is going to outperform the rest of the national market in the future. And a lot of the time, this might be a new market that's coming into the picture, and people say, well, why would you choose that? It hasn't performed historically. An example of that would be the Sunshine Coast back in 2017. Historically, absolute horrible market, has been really, really slow performer, very sluggish. Even the yields weren't great, but certainly no growth. Fast forward to Perth. Terry started putting Perth back in 2017 and 2018. It started to make its way into our national top 5s and top 10 reports. We had challenges back then where people would say, Terry, why are you saying that? Like, Perth has been a boom and bust market. But the thing is that we specialize in change, in identifying change. We can see that market was now all of a sudden, it was a lot more, the economy was a lot more sustainable. It actually had substance. It was no longer just propped up by mining. So these are the things we need to look at, and the past does not predict the future. So backward looking real estate data can actually put you in the wrong space. It's like being at the end of the herd. You're actually going on what other people have already done. So taking a bit of a step back and thinking, what has real estate done nationally over the last sort of 40 years, 45 years for that matter? Everybody realizes that, Sydney, Melbourne, Brisbane, over the last, 45 years have grown astronomically. And I suppose the question that people often ask, when they see median prices in Sydney at 1.5, Melbourne at 980, and this is actually dwelling prices, mind you, and then, it's house prices. I was going to say in terms of dwelling prices, Adelaide and Perth are actually now higher than Melbourne as well, which is hard to believe. But you go 1.5, 980 and $1 million for Sydney, Melbourne, Brisbane, and people think, how can that keep on going? Is that sustainable? And that's, again, the wrong question. It's not necessarily has it reached its peak, or is it possible for it to keep on going if you just think that it's because it's unaffordable. That's actually not the right question. Again, in order to understand what drives real estate markets, we need to look past the headlines. The headlines that we read in the paper every day is that, it's impossible to get into the market as a first home buyer. It's become unaffordable all over Australia. The capital cities are just impossible, and everybody has to move to the regions. Now, whilst there's some truth in the fact that it is much harder to buy than it maybe used to be because of incomes to median price, the big thing that we need to consider here is what actually drives real estate prices. And most people, or most of the media, talks about interest rates. They talk about factors that might move the dial on real estate prices, but quite often they don't understand what actually the fundamentals are. And one of the biggest fundamentals that's driving real estate in the market today is the lack of supply. We're simply not building enough houses. Now, even through the last 5 years where we have seen escalating prices and, we had banks coming out there and saying, look, the market's going to crash. We're going to see 20% drops like we did back in COVID, which again, never eventuated. It's because they put too much emphasis on the things that actually don't drive property prices. Now, Terry Ryder is actually about to release a book, which is called, I don't even remember the title exactly, but I think it's What Makes Prices Right. And it talks about these fundamentals. And interest rates have very little bearing on property prices. The actual availability of stock has a lot more emphasis on what will move the dial on property prices. Now, one of the big mysteries, or at least myths in real estate, is that you must buy in a capital city in order to get growth. And that's simply not the case. The growth in median dwelling values over the last 5 years to 2024 show here that Sydney had 45%, 51% in the regional area of Newcastle, Brisbane 63%, its regional counterpart in Gold Coast 77%, Melbourne 25%, while Geelong did 32%. You head across to Adelaide. Adelaide's an incredible market which is showing no sign of slowing down. And if we take our mind back to over 5 or 6 years ago, it was a market, again, that was a pretty slow performer, but now one of the most consistent markets in the country. Its regional counterpart in Mount Gambier, a market that's only 20,000 people, but a really strong local economy. It's had nearly 60% growth there in the same period. Perth, we know, has been a market leader for many years now, slowly coming off the boil at the moment, but it had 62% growth in that time. But in regional Western Australia and Mandurah, 78%. You head into Hobart, great performer throughout COVID. Launceston, on the other hand, 57% over the last 5 years. So it dispels the myth that you must buy in a capital city to get growth. It's useful to understand, and this is one of the probably the most important parts of understanding what actually moves real estate prices, is that there is no Australian real estate market. Real estate markets are actually generated out of local economies, and there are thousands of local economies in Australia. If we look at the calendar year of 2024, Perth led the way at 15%, Brisbane just behind, Adelaide 12%, and we head all the way down to Melbourne, which went backwards 3%. So if we have an Australian market, which the media likes to talk about, and we said the national market grew by 5% last year, or 6%, depending on who you ask. At the same time, we've got some markets that are rising, some markets declining, some recovering, etc. This goes to show that real estate markets are absolutely cyclical. And understanding those cycles is where an investor can really take advantage, not just of long-term hold, but also short-term uplift. And what I mean by that is, if you can buy into a market that is rising, and we're going to talk about some of the formulas to identify that shortly, but if you can buy into a market that is rising, you won't just have to wait for that 10 years of growth. You might be able to achieve some of those figures that we've just talked about in 5 years. So understanding that markets are cyclical is an absolute jot down moment for you guys tonight. If you're not familiar with how markets work and understanding these cycles, it's a really important takeaway for tonight's presentation. So they often talk about the March 2020 to the March 2025 period. A lot of real estate analysts talk about that, and they call it sort of the post-COVID years. Now, the national top 10 locations in terms of capital growth will surprise people. A little known town, there's probably people on here that do work in the industry that may be familiar with Murray Bridge, but for a lot of investors, just thinking, where do I go and park my money for the next 10 years from my retirement? Murray Bridge is probably not one that's come up in the realm of most consumers, but it's actually had 101% growth in 5 years, the lead performer in the country. Kingaroy, the next one down in Queensland, capital of peanut country. It's another one that a lot of people wouldn't recognise. It's a population of only about 15,000 people, but really strong local economy with a booming infrastructure pipeline. Almost doubled its money in 5 years as well. And as you can see here, the list goes on. What you won't see on here is too many locations that are actually within the capital cities though. So again, going back to that dispelling the myth that you must buy in a capital city, it's certainly not the case. Now I'm going to preface that and qualify on that and say, there's probably an element of people out there that may think that hotspotting is all about the regions and those smaller rural areas, and it's just not the case. In our national top 10 best buys report right now, and even if I go back a couple of years, there's always a mixture of capital cities that we're recommending because, let's face it, a lot of people live there and they feel comfortable buying there. So we certainly talk about the capital cities and the ones that we believe will outperform. in terms of outperform the national market. But, being an independent business like we are, we report it as we see it. And when we can see that the regions are outperforming the cities, we'll also call that out. Now, I'm going to take you through some of the formulas that we use tonight to actually get rid of some of those really small rural areas that are a bit higher risk. So we would never, be recommending mining areas or areas that are really propped up by a single industry like agriculture or tourism. But these markets that you can see here, there's a theme. The theme with all of these locations is strong economy. If you can target locations that have really strong and diverse economies, this is the sort of growth that you can expect. So the other paradigm shift that's been happening in real estate over the last couple of years, and it's one that we've probably been copying a bit of flack from the industry from, is that we've been going against the grain a little bit and saying that, most people probably think that because we've grown up with such huge growth in housing and units have been underperformers, that will always be the case. Not necessarily the case, and this is why we like to report on trends, whether they're popular or unpopular. We want to report it as we see it. And units, and some of the stats I'll show you in a moment, are quite surprising, but units, and this doesn't necessarily mean high-rise apartments or anything like that, but units units independently have been outperforming houses all over Australia. And you can see here the type of growth that we've seen in the 2025 financial year up to the end of July. Start of August, end of July. Brisbane, 13%, Perth, 12%, Adelaide, 10%. Historically, you just didn't see that in units, but we're seeing this more and more, and not only in the capital cities, we're also seeing it in the regions. So South Australia leading the way there with 16% growth on a unit. This is something that investors in the past just wouldn't expect. Moving on to house price growth for a bit of a comparison, they're under what units are doing. So Adelaide right now leading the way for the end of the financial year at least, 9.8%, followed by Perth at 7.1%. And it's worth going back a few slides and remembering, and again, unpopular opinion, but Terry came out probably 9 months ago now, 12 months ago, and said, we can see that Perth has started to reach a peak. What we mean by that, it doesn't necessarily mean that Perth will fall off a cliff like it did many years ago. And again, it's because of why we put it in there in the first place. It is a much more sustainable economy than it used to be. When we say it's reached a peak, we mean it reached a peak of affordability, and we can't expect that same rate of pace to continue. So this goes to show that Terry was right when he made that prediction. At 7.1% today, when we were 15% capital growth, and this is a moving 12-month scale, so each month that gets updated, it's gone from 15% down to 7.1%. We believe that will continue to come down, and some of our predictions will come up soon. One of the ones I want to highlight here is Darwin. We recently did a story on this, and it was because there were some articles going out in the media saying the market that no one predicted, Darwin, it's just come out of nowhere. The truth be known, we did predict that. We could see incredible pipeline of infrastructure going into Darwin, and we could see rising sales activity, which is typically a sign of demand, and obviously price growth will follow. So we picked the Darwin market. You can find this publicly back 9 months ago before it was getting mentioned anywhere else. Terry was predicting Darwin would be one of the best performers in Australia this year. And at 5.6%, I will almost guarantee you that that's probably going to be in double digit by the end of the year. So looking at the regions, again, South Australia continuing to lead the way at 13%. It's actually Western Australia in the regions that are outperforming the capital city of Perth. So Western Australia still have some pockets where we really like. And ironically, when I say ironically, Perth itself as the city of Perth, the actual CBD there, some of those markets in the CBD and surrounds are actually still performing really well in the unit market. So it's still going quite well, but it's the housing market that has really probably reached its affordability peak. We've now also started to see, I'll quickly go back, Melbourne has started to reach the positive territory, and also regional Victoria. And we're starting to see some real green shoots in some of these markets. And there's always a bit of a lag with real estate data. So what we're seeing today and what it will look like in a couple of months' time, I think you're going to see Victoria is actually a hell of a lot further ahead than where it is today. And we might land at sort of 5 or 6% by the end of the year. So one of the things the media does like to talk about is the fact that we have an Australian market, and the Australian market did this last year, and the Australian market will do this next year. When they were doing that at the start of this year, they were saying that 2024, the Australian market averaged between 4% and 5% and 6%, depending on whether you went to prop track or Cotality, or CoreLogic as they were once called. But through our analysis, 4,500 markets in Australia that had 25 sales or more, and that's something we look at. We always look at things that are markets that have had substance, so they need at least 25 sales as a bare minimum for the year. Over 1,700 recorded median price growth of 10% or more. Okay, so there's about 30,000 markets in Australia. When you go 25 sales or more, that cuts out a whole heap of those markets. Lots of tiny little towns that just got no substance in terms of economic and investment insights. So we just rule them out. We say we've got 4,500 left. Of those 4,500, 1,700 recorded double-digit growth. 664 of them were in Queensland, nearly 400 in Western Australia, nearly 300 in South Australia, 250 odd in New South Wales, 48 in Victoria, 18 in the Northern Territory, 17 in Tasmania, and 14 in the ACT. 572 markets actually had 20% plus growth. So 60% had median prices below 700,000. So what does that mean? You don't have to go out and spend $1 million to get a good investment property and achieve growth like that. 35% were actually unit markets. More of half of them in Queensland were actually unit markets. And the outperforming areas were Geraldton, Copper Coast, Playford, LGA in the northern suburbs of Albury. Gold Coast unit market has been an outperformer as well. Rockhampton, and then Townsville. And we'll touch a little bit on Townsville later because that's another market we think has now come off the boil. It's certainly reached a peak, and we think that we'll start to see a bit of a follow-on to what Perth did. So in Townsville, 40 suburban markets, units and houses had price rises over 20%. Okay, so I've already touched on this, but the past does not inform the future. So we don't look at real estate data and say, well, look, this is historically what it's done, so this is what we should assume will happen in the future. That's not what we look at. What we want to be looking at is we want to be looking at factors that show forward-looking indicators, and that's what we're about to touch on. So one of the challenges that people have right now is when they start to look at markets that maybe Hotspotting or some other analysts are actually going out and saying, look, this is the market to be in right now. One of the challenges you have, and we hear this every day, is you go, I really like that market, so I'm going to go and start to look there. By the time you actually start to place offers, you find out there was 32 other offers on the spot. The top 15 were well above what you wanted to pay, and half of them didn't have any building and pest clauses or any due diligence like that. And we're hearing this quite often. So that's not the space you want to play in. It's certainly not a recommendation to go and try to win those deals, because winning can be losing in those markets, because the only way to win is to cut out your due diligence and actually pay too much. So we don't want to be doing that. One of the things that we often talk about is understanding that there is a constant change in real estate trends. And if there's something you can take away from tonight's presentation, it is forget what you maybe used to know and start to think about what the future of real estate is, because these markets change all the time. And if we stay on top of that and we act quickly, we can actually take advantage of it. One of the first ones is the rise of small cities. Darwin is the first one. Hobart's slowly coming up as well, but it's actually the two markets of Hobart and Darwin, which were the smaller of the capital cities, that are actually showing some of the best sales price increases in our most recent spring price predictor index, which is what we released this week. We're also seeing the exodus to affordability. And what that means is, and again, something the media has been talking about for years, is people leaving the capital cities to live in the regions. The media will tell you that's because of COVID and the fact that we can now do this, jump on a Zoom call, work from home. But the truth be known, that was happening well before that. You can go back in history. Terry and I were doing webinars on this even back when I was at my previous business. We were doing topics on this back in 2017, 2018 with that exact subject line, the exodus to affordability, people selling down the $1 million, $1.5 million homes, and more importantly, the $1 million mortgage, selling them down in the capital cities, moving into regional areas to get the affordability factor, the lifestyle factor, and what they're looking for is the connectivity back into the major capital cities. So if you're looking at those areas that have got strong connectivity through road and rail, these are the markets that are growing. The other trend that we've noticed is what we're calling the rise of apartments. And this is something that a lot of people are struggling to get their head around. They think if you want growth, buy a house with land. I can tell you now, people are choosing to live differently. I can tell you my personal story. I grew up in country Victoria, lived on farms, lived on in 4-bedroom homes on good size houses. When I moved to Melbourne, I moved into a 1-bedroom apartment when I first got here, and I hated it. It was like couldn't swing a cat in there. It was awful. But eventually I started to move into other apartments which had more what do you call it? More amenity. I love the lock up and leave aspect, the security. Where I live in Melbourne is a really nice suburb, and I can tell you now, the crime isn't in those areas where the socioeconomic activity or the socioeconomic activity scores are low. It's actually happening in a lot more affluent suburbs, and there's so many people and so many cohorts of downsizers and right sizers that are actually choosing to go and live in these high-rise apartments for security reasons. I anecdotally hearing evidence of projects even selling off the plan recently. There was a project in Brighton that was selling from prices of $7 million upwards and sold out in a night. And most of these buyers are saying the reason they want that is they want community, they want security, they want the lock up and leave. Now, if you think about it, this is what's driving not just that cohort, but so many people are choosing to live this way. Rent investors, people migrating from overseas that might be used to living in apartments. This new change in lifestyle is what's driving the prices up. And not to mention that there's a huge disparity in a lot of these markets between unit prices and house prices and affordability rules. The other trend that we're noticing is called a second wind market, and it's something we've been talking about for probably 12 or 18 months now, is markets that were very strong throughout COVID, and then off the back of reaching a bit of a peak, what typically happens in a cycle is we reach a peak of affordability and then we start to plateau. When we start to plateau, what happens is it will sit there for a little bit and then all of a sudden it gets a little bit of steam again. There's lots of these second wind markets that are basically have proven themselves in the past. They've had that cooling off part and now they're starting to take off again. So lots of second wind markets that we'll touch on shortly. All right, 2024, we saw Perth at 15%. I've already gone through that. I'm going to skip forward and start to look at where we are at the middle of the financial year. Adelaide now at the top, Brisbane just behind, Perth slipped to third. Darwin has come up from 0% growth at the end of 2024 to midway through this year, showing almost 6%. It was about 5.6. By the end of the year, our prediction is that Darwin will be leading. We believe Brisbane behind that, and then Adelaide. Melbourne, obviously coming off a negative up to fourth place, is also one to watch. All right. This is actually Terry's book. So coming soon to a bookshop near you. They actually have started to advertise that just recently. So it will actually be in bookstores very soon. But one of the things that we talk about there is there's a big difference between lagging indicators and leading indicators. And that's what we're going to touch on now. So when we do our research at Hotspotting, we have what we call the price predictor index. And some of you may be familiar with that. It's a simple premise, the price predictor index. Basically what it looks at is sales volumes as a precursor to growth. So what does that mean? If we see rising sales activity, it's a sign of demand. And what tends to happen is if we see a pattern of rising demand in an area, price growth usually follows. On the flip side of that, if we see a market that is, and Perth is a great example of that, I've used examples on previous webinars of the local government area of Rockingham in suburbs like Baldivis, where, back in March 2022, we were getting 350, 400 sales in a quarter. And, go back to the most recent one, it's half that. It could be 150, 160 sales. That doesn't necessarily mean that prices will, fall off a cliff, as I mentioned before, but it does mean that we expect them to soften. But the whole premise behind the price predictor index is it allows us to look at every suburb or market in Australia every quarter and give it a classification in terms of, is it a rising market, declining market, etc. The next thing that we do, so that we know that the market has actually got substance and it's low risk, is we put it through the empirical formula. That means we're looking at markets that are strong and diverse. We're looking at a minimum market size of over 50 sales in a 12-month period. We want a minimum population size of 50,000 in that local government area. We want to see existing strong infrastructure in the way of road, rail, medical, but also evidence of new projects coming ahead. We want to see low vacancy rates, pretty easy to achieve that Australia-wide at the moment. We want to see increasing employment opportunities, creating more job growth. And then using the price predictor index, we look at those rising sales activity. And if we combine a rising market and get strong capital growth within a couple of years, for those investors wanting to grow a portfolio, you're back in the market again. We look at markets that what we call affordable, and that's typically under the 800 median price point. And then the last one is low risk. Low risk means avoiding markets that are, one-trick pony towns, ones that are, very much heavily geared towards a particular industry like agriculture, tourism, or of course mining. So we want to avoid those markets. Now, just really quickly to cover off a couple of quotes from other people that are very reputable in the industry that are singing from the same hymn book as us. Arjun Paliwal from InvestorKit. Arjun says, successful investing hinges on understanding how markets behave at a local level, not just reacting to the rate moves by the Reserve Bank. Local supply and demand factors will dominate performance. Then we go into Simon Presley, another great real estate analyst in the country. We really respect his work. One of the things he talks about is the single biggest important component for property market performance is always local economic conditions. Real estate markets are grown out of local economies. Quite often, people think that they're looking for the perfect piece of real estate. That could be best house, best street, best location, whatever it may be. We've always believed, and this is another one from Simon Presley again, the location that you buy in will do 80% of the heavy lifting. Now, Simon did some research and he actually looked at what actually drives capital growth. And the actual property itself, as you can see here, has actually got a lot less to do with it. You could buy the best property in the worst city and the worst time of the market and not do well. So the premise of this is buy in the right location, buy good real estate, and you will get good capital growth. So I've touched on a lot of this as we've gone through, so I'm going to skip ahead really quickly to the last couple of slides to do with second wind markets, and then I'm going to hand over to Joe. So I wanted to sort of show you what a second wind market could look like. So Sippy Downs on the Sunshine Coast has got a median price for houses of 930,000, but 620,000 for units. Actually, the unit market, which is really exciting there and gives you really strong rental yields. Now, this is what we would typically see in a second wind market. Really strong growth. Markets can't continue to do this forever. They get to here and then they plateau, and then we start to see that growth again. Another market that we've seen do that is Ravenswood in Launceston. Median price there, 390,000. This is probably a bit more of a down market area in Launceston. But again, this is an example of what we start to see with a second wind market. And what you can't see there, but what we can see is the rising sales activity in this market. And that's what we will believe lead to price growth. Scarness on the Fraser Coast, another second wind market, median price 640,000. Frankston is a market that we've been highlighting in the city of Melbourne as one of the most exciting markets in the country. And I tell you what, turn up to auction days down there and you'll be very, very surprised at what's happening. It's in terms of green shoots, it's probably more of a green shoot than anywhere in Melbourne right now. So really quickly, the markets that have showed really strong growth, 2020, 2022, and then flatline: Bendigo, Ballarat, Shepparton, Albury-Wodonga, Dubbo, Wagga Wagga, Hervey Bay, Bundaberg, Sunshine Coast, Launceston, and the city of Burnie in Tasmania. Okay, to finish off, the paradigm of units outperforming houses. This is something that we've been talking about for about 9 months now. As I mentioned, there's a lot of different cohorts choosing to live in this lock-up and leave. It's driving this change. But the interesting stats on this is that, actually it's on the next slide, the interesting stats in terms of the growth. Unit markets did do better on prices than houses in Brisbane, Adelaide, Perth, Darwin, and regional markets of New South Wales, as well as Queensland, South Australia, and Tasmania. In terms of the actual amount though, 248 LGAs in capital cities, unit prices rose faster than houses in 69% of local government areas. In Brisbane, it was 76%, in Perth, 75%, and in Sydney, 71%. So, as much as it might be hard for a lot of people to comprehend because they've always had this adage that houses will outperform, it is definitely not the case. And this is a trend that we want people to recognize. So, I think I've got through Terry's slide deck now. I'm going to start to hand over to Joe. Chris, we've got some questions on there. I'm just wondering if we might push on to that and then come back to questions at the end. Just I'm mindful of probably gone about 5 minutes over time. All right, so Joe, I'll get you to join us now if you can.
Yeah, of course. Hi, everyone.
There we go. So Joe from Abodey. Joe has been leading the way in terms of AI in this country in the prop tech space, if you ask me. She's been working very closely with Hotspotting on a lot of the technical stuff that we do in the way of, I suppose, catering more to the buyers agents audience. But Joe's going to take us through a demo on her Abodey app tonight, and I look forward to seeing it. Over to you, Joe.
Amazing. Thank you, Tim, and Hotspotting for having me and hosting me tonight. Great presentation, Tim. Thoroughly enjoyed the content. Couldn't agree more with everything you said there. So hi everyone, to introduce myself, I'm Joe Agresta. I'm the CEO and co-founder of Abodey AI, and it is a property matching app, a little bit different to realestate.com. And we focus on helping buyers have all the right steps in place so you can buy your property in as little as 6 weeks. So what I'll go through is a little bit of a presentation, and then I'll jump into the app and give you guys a demo of what we actually do and what we've been working towards. So I'll just share my screen here. And I'll minimize my head. We don't need to see that. Okay, so like I said, we are a mobile app which is available in the Google Play and Apple stores, and it is mainly targeting owner-occupier buyers, but we do also help investors. So first things first, when we look at the market itself, we have to reflect, and why we started this business was about buyer sentiment. So the why behind we started Abodey was really out of frustration. So I'm a buyer's advocate by trade. I purchased my own, investments and properties, and it was the purchase that I made for myself and my own home with my partner that inspired me to start this business with my co-founder Anand. And basically, I had a really bad experience. I struggled with a lot of the professionals. I did a lot of negotiating myself, and I had to really defend my position as a home buyer. And what immediately came to me was, if this is hard for me as a professional and I am doing so much negotiating and battling, what is the rest of Australia doing, and what are our everyday home buyers or investors experiencing? So it led me down the path of, how do we fix this problem? And the first step in that journey was surveying the market. So we did a very big survey. There was over 500 responses. This is back in 2021, where we asked buyers what the problem was. And when we, analyze that data, home buyers spend an average of 6 to 9 months on market. 45% actually end up overpaying for property, and 1 in 3 buyers actually regret buying their home. Now, this was alarm bells to me to do this type of survey, because it's scary to think that our biggest purchase, which should be a happy time, especially if you're buying as an owner occupier or as an investor, if it's your first time investment, you don't want to be faced with these issues. So this is really where we started to go, okay, well, let's look at the problem in more detail. So when we unpacked the problem, it came down to 3 core issues for our buyers, and it was finding the home. So everyone knows here the pain, or the pain, I should say, but the doom scrolling process of going through realestate.com. I know I'm a culprit. Lying in bed late at night before bed, and I jump on realestate.com and I end up scrolling and scrolling until I find what I'm looking for, until I don't know what I'm looking at anymore. The other one is data overload. There's a lot of noise, a lot of guidance, a lot of tips. If you've been on the market for a little while, you'll notice that there's a lot of different sources to trust, and it's really hard to narrow down who to trust when it comes to what you're absorbing and what you're reading. And that's why part of this event with Hotspotting, and what Tim and the Hotspotting team have put together with Terry, is fantastic, because you're getting all that information in one place from a really reputable source. So great, good on you guys for taking that step, because a lot of home buyers don't. And then the other problem was, no one knows who to trust when it comes to professionals. And you'll all know the saying, because we all have them, but you'll have that uncle at the barbecue or the auntie at the barbecue that knows everything about property that they purchased 30 years ago, and they start telling you how to buy a house. And you're like, okay, but the house price is not 150,000 anymore, auntie. Why would I do that? So there's this problem of trust and not knowing what to do. And the people we often trust are our family, which isn't a problem, but it's only a problem when they're not up to date with the most recent information. So that's where a lot of the due diligence falls on you. So now that we've covered the problem, this is where Abodey really steps in. So we built an AI algorithm, which is Abodey AI, And what it's designed to do is, let's say instead of you going, I'll explain the process as you would today. So when you want to buy a home today, often your first step is to jump on realestate.com and start looking at properties. You start thinking about going to inspections. And then your second thought is, oh, maybe I should find my budget. Maybe I need a broker or I need to talk to my bank. And then you start kind of fumbling your way through the journey. And this is where that time period of 6 to 9 months really blows out, because you don't know exactly what you're looking for yet until you start going into the market. Now, Abodey is designed to stop you at the very beginning from doing that. So the way we've done it, and I'll show you this in the demo, is we take a brief of your lifestyle wants and needs, your budget wants and needs, and your property preferences. And then our AI, instead of sending you to doom scroll, we will tell you the top 5 properties based on all those factors that really suit your, your property, your situation, and your lifestyle preferences. Now, the way we've kind of mapped it out is a 6-week journey, and it looks a little bit like this. So we are not just another buying app or another realestate.com kind of search tool. We are a very guided experience. So we get you to set up your profile. You start to connect with professionals. So we've personally screened all our partners. Tim and Chris from Hotspotting are actually one of our partners. So you can also work with them as advocates. We've screened all of our professionals from background checks. We've either worked with them personally or had an experience with them through our customers. And we actually vet them to do the right thing and a good job. So we have mortgage brokers, buyer's agents, conveyancers, building and pest inspectors, and even removalists. And then we've got our smart matching tool, which I'll take you through. And then offers and contracts, you can review contracts, negotiate with your buyer's advocates, and choose support if you'd like from any of our professionals. They're all free to chat to. And then if you wanted to engage their services further, they'll take you through that structure. And then due diligence and keys. So you can then book in we give you a checklist of everything you need to do between searching for your home all the way to settlement. And then we tell you how to actually move in. So things like when should you say, end of lease cleaning? When should you hand in your notice? When do you have to book in time off from work? So we've really thought of everything in the journey on your behalf, so you don't have to feel that stress and that overwhelm. So we're really passionate about this 6 weeks. We launched in the market initially with a test product back in 2022, and we managed to save home buyers an average of $30,000 on their purchase. We got them through the journey. My shortest client on the mobile app was actually 3 weeks with us. Granted, she already had her mortgage sorted out, like as in her lending position, but the longest I had of someone who had no professionals and no support and no idea what to do, we got them into a property in as little as 6 weeks. And that was pretty much the average for every home buyer that we now have, which we have over 500 downloads on the mobile app, and it's growing daily. So we launched that last year in December. So we're very proud of what we've built. We believe in it, and we're also here to support. Which leads me to, what do you actually get inside the mobile app? So we give you 30 personalized matches. Now, there's a reason for this. You don't need to have 50,000 or even 50 properties put in front of you. The goal is to save you time scrolling. So we're doing all the scrolling on your behalf. We're doing all the analysis. So when you submit your profile, we're scanning thousands of data points. We're also going through hundreds of listings, and we're eliminating them and then giving you just the top 5 that are really best suited to your position. We give you a checklist, as I mentioned, step by step from search to settlement. We'll also connect you with those professionals, but it's at your whim and at your choice. So the profiles are there and available. We've done a podcast episode with them. We do have a home buying podcast called the No BS Real Estate Podcast. It's perfect for this audience, like you guys, if you wanted to tune in and listen to other professionals talk about what they do and how they do it. We unpack a lot there. Even Scott Aggett featured on our podcast as well, who's presenting after me. And then we're also opening up a support line. And this is the first of its kind, which is launching on the first week of October. And that is our Aussie-based call centre. So we are opening up a call centre for all home buyers to get unbiased and no sales talk. It is just pure support from 8 to 8 p.m. Monday to Saturday. So if you've ever been in a position where you just want to ask a question but you don't know who to call, you're going to be talking to an actual team of buyers advocates who know what they're talking about, know how to guide you, and can get you on that next step. So the goal is to just support you, make sure you're, well supported for anything and any of your questions. And then if you need any additional support, we've got a panel of professionals that can help. So we're just here to support you on whatever you need. So that's Abodey in a nutshell. Now let's go into the demo of what the actual mobile app does and how it can help you on your journey. So just go down to the next screen and I'll present this here. I would really love to get rid of this bar. I don't know how. Okay, it's all right. So the experience you're looking at is for our investors in the room, we do assist investors as well, but it's more from the professional side of things. So it's like if you needed some steps and some guidance on how to purchase and who to purchase with, or the type of team you need to establish around you to make your investment property happen and make your purchase happen, you can download the app to purely access professionals and the steps and checklists. But property matching is mainly about owner occupiers, which is what I'll take you through tonight. So once you get started and you register, let's say you enter in all your information, you'll receive an email to verify your account. Now, once it's all active, you'll be taken to the app once we do that, and you'll start setting up your profile. So when you start going through your profile, it's pretty basic, but I want to say this to give you the best experience, right? The whole point of these questions is to set it up properly so we do a really good search for you. So it's not about ticking the box, it's about really thinking about the answers and making sure that you get a really good result for the matches. So in this example, if it's a second-time buyer, let's say 3 to 6 months on market, they're looking to upsize and maybe future capital gains. You can set your budget here, and that's like, your min and max. What types of properties you're interested in, how many bedrooms that you want, so your min and max. Same with bathrooms, cars, and land size. At the moment, it's pretty standard stuff. Now, here's where we are a little bit different. We start asking you about your wish list. So when you open this up, we ask you about your nice to haves and your absolute must have features. Now, you can go through this list. This is a demo, of course. When you download the app, you're not going to have repeat body corporate 10,000 times, but you'll have other options. But it's to get an idea and to help our AI understand what you're not going to negotiate with and what you are not going to settle for. So if you said solar panels was an absolute must-have, and no body corp was a nice to have, we will prioritize finding homes that have solar panels. And if they don't, and we couldn't find a match or we couldn't find the exact right property, when you get the results, we'll actually tell you why you'll need to compromise on this particular purchase if it meets 9 out of 10 of your criteria. So let's say that you've gone with something like this. When you go next, we will ask you about your deal breakers. So for example, this is a place where you can write anything you want. You can say, I've had people, do things like, I don't want to be near busy or main roads. I want to be near schools. I need to be near mum and dad's. I need to have a property that hasn't got, large or weird shaped backyards. I want a large yard. All these types of things can be thrown into your deal breakers. And then our AI will eliminate those properties when it does its search. And then, of course, you select the suburb that you're interested in. We have had a feature update here in the app where you can actually see the median prices for properties now. So when you search a suburb, it'll say to you at the bottom here, check out the suburb trends. And you'll be able to see the median price for properties in the area over a 6-month period. So it's to give you an idea of, are you in the right budget for that suburb before you start searching in it. Then you can set up your radius for how far and wide you want to search. And then these are your important addresses. This is optional, but what we do basically is, let's say you have a preference for, maybe work, or maybe, you can add another one like school or mum or dad's, whatever it is. You can select the suburb, and then what our AI will do is calculate the distance from the property we match you to how far it is from this actual suburb. So you can see a holistic view of if it's going to suit your lifestyle or not. And then, of course, we ask you what's important to you in a neighbourhood. So you tick the boxes that apply. So, close to freeways, close to parks, dining, whatever it is. If you're open to renovations. And then your lifestyle. We ask you about pets because it's important. You might have pets that you're thinking about getting that you need enough backyard space for, or even like it's same goes with children. We want to know what type of pets if you want to share it. Again, this is optional, but it just helps our AI personalise your results. And then your hobbies and interests, again, it's optional, but the more you give our engine, the more we can actually do a match for you, the more we personalize it and really help kind of put you in that property as best as we can without you seeing it. So then let's say, we capture all this information and you submit the match. This is just an example of what happens if you don't complete the form. So sorry about that. So once you complete the match, we've improved our engine. It actually takes under 2 minutes to give you the top 5 properties, but we do send you an email when the matches are ready. So now let's say that your matches have come back and we see an example like this. I want to show you the type of data that we actually give buyers that you don't get access to through other platforms. So we give you agent grade data. So you can see here, this is the property itself. These are some of the matches that we have. But this first one here, that description is not realestate.com's property description. That is personalized to your situation. So when you click on this, it's going to give you some really personalized data about your property. And it's going to say, the property is in a peaceful community close to amenities. It'll make it really personalized. This is just an example. And when you do this for yourself in the mobile app, you'll be able to experience how powerful it really is. Property insights. So we actually give you the average valuation data that typically is accessed by mortgage brokers, buyers agents. This is a tool that's provided by PropTrack, who is part of realestate.com. We are partnered with them and they give us access to this for our home buyers. So before you make a purchase decision, you can actually see what the value of the property is. When you go down, you've got obviously your sales history. And the other part that we do give you is we are partnered with Land Checker. So Land Checker give you all of your property restriction data, the zoning restrictions, if something's under, heritage sensitivity, flood zones, bushfires. We give you access to Land Checker's premium property report, which is typically a paid access or paid per use. So you'll have access to that here for any properties that you do. And then when you go to the suburb fit, this is really what I love about the product, personally my favorite area. This is where we really visualize, why is this suburb a good fit for your profile? And this is where we'll start to talk about, pets. We'll start to talk about your hobbies, why it aligns to your, situation or not. And we'll talk about, the distance to neighbourhood preferences. So you can see here we've flagged bus stops, train stations and schools. Your frequent locations if you selected them. This is obviously just an example here. But then the last part of the data is the demographics. So then you can start to see, well, what kind of data are we looking at from a suburb perspective from the last census? So we'll tell you about population, average age, median income, all of those metrics that really help you kind of understand, is this the right home for you? Is this the right suburb for you? And of course, we do give you burglary statistics as well. So this is only available for Victorian residents. Everywhere else, we're still trying to source crime data. It's not to scare you, it's just to give you a reality of, how safe the suburb is before you move into it. So once you've kind of used this part here, this is matching, but the other part of our product, and this is, I'm just going to try and find it here. Sorry, give me a moment. Oh, there we go. Is professionals. So we have a professionals tab down below here. So if I go back, I keep playing here. So we've partnered with professionals, as I mentioned, and you can view all of their profiles in this type of way to see where they're from, what they do, and how they operate. And as I mentioned, you can also listen to their podcast episode before you even talk to them to see if they actually are a right fit for you. So that's why we did podcast episodes or interviews with these professionals, to help you get a sense of, do you want to work with them or not? And that way it's a less invasive way for you to reach out before you've actually had that conversation. You get to listen to what they do. So we get all this, their background checks, so what services they actually offer, who they're affiliated to. So it's like, if they've got all their licenses and their accreditations. And then of course we link it to the Google reviews that they have, or whatever review link they've provided. And you can see here, this is a how we verify, which talks about that, verification process, which is very important to us, to give you that trust in our professional network. And then the last part here really, and then the other thing you can do is you can add your own professionals. So you might already have a mortgage broker or an advocate you're working with. You can add their details here. And then for quick access, you always can see who your professionals are at the top of the page when you come to this. And then you can choose to contact them quickly if you want to. So that way you don't have to try and say, oh, what was my broker's name? Who do I call again? They're all in the app. And then the last part is the checklist. So this is where we've given you a complete checklist of what to do, how to do it from start to settlement. So first things first is we've broken it down into, finding your home, financing, legal, moving, and settlement. You can add your own tasks. So you can say finding your home, and you can see the example here is applying for annual leave for the move. You can add a due date to the task, and then that task gets added to the list. You can always reorder it in order of priority. And then once you save it and you return, you'll start to see your list look like this. So get your first property matches, save like properties, financing, legal, moving, and settlement. We've thought of literally every step. So there's more than 5 in each step, but it's designed to kind of keep you on track and make you feel reassured. And then once you jump onto the app, this will be up, not this view the way it is here, but it'll be our podcast. So you'll have quick access to any of our articles, our podcast episodes, just so you can have the information that you need. So that's really the demonstration I wanted to give you of the app. And this is something that, as an offer to you guys, we will be giving away Abodey Premium for $0. Normally, we have a $350 one-off fee that's valid for 12 months. But because you've joined the webinar and you've taken the first exciting step in your property journey, we'll give it to you for free. There's a small form to fill out at the end if you want access to it. And we'd love for you to use it. And I'm happy to chat to anyone for any questions. So that's really my part of the presentation. I'll hand it back to you, Tim.
Thank you very much, Joe. That was really good. I think it's especially for homeowners specifically, it's a really good product. I know we've already had a couple of questions flooding into the chat. First one was, does this work for investment too?
Great question. So like I said, we don't have investment specifically targeting in the app, but the concept works, of course. If you wanted to set up your filters, the way I would use it as an investor is those lifestyle-based questions. I would actually answer them about your future tenants. So who do you want that property to appeal to? So do you want it to appeal to someone with pets? Do you want it to appeal to someone who's got these types of hobbies? So you can answer that questionnaire absolutely from that tenant perspective for the lifestyle side. And then for the property investment side, you can absolutely get your matches with the data we have.
Very good. I have another question from Sally just asking, is this Australia-wide as well?
Absolutely. Yep, we are nationwide. Even our professionals service nationwide as well.
Very good. And I said, when you add your prerequisites on what you're after, does it take into account things like lifestyle? Yeah, so things that you're looking for, obviously, as a homeowner, you can obviously start to put those places in there, and it'll actually write back to you. It'll actually send matches that actually match those lifestyle requirements.
Yeah, absolutely. Like that's what we designed. It took us 3 years to develop the engine, to be really specific, because we know part of the pain of looking on any search platform is you search something that you want and you can't really niche it down to what you're looking for and you forget things. So the reason we ask those questions is because the algorithm is designed to go and find it. That if you said you have a dog, for example, and you need to be within 5 kilometers of a freeway entrance, our AI will write back in those comments and say, well, hey, it's actually within 5 kilometers of a freeway entrance. And you know what? There's enough space for a dog and a cat and kids for this backyard. Yeah. So it's really personalized, and every single report is, just to quickly say, it's generative AI. So what that means is it adapts to what you give it.
Yeah, right. That's good. In terms of the add-on services as well, somebody's asking, once you've bought, are there additional services that you offer? I'm assuming they're probably talking about conveyancing and mortgage broking or...
Yeah, so the additional services like an after service for how to manage your property, we're actually building something at the moment. It's not quite live, but the Home Buyer Support Centre is really where you'll be able to start doing those things. So the purpose of the support centre is any questions or guidance that you need post-purchase, like, if it's home maintenance or if it's issues with legal, anything like that, you can call the centre and we'll direct you to the best solutions on market that we're partnered with to help you through it. But yeah, we're building a solution behind the scenes of how to manage your home once you get it.
Out of curiosity, Joe, this is more for a question for me. What's the future of Abodey in that space? What else are you working on there?
I think the biggest things we're working on is the support center at the moment, which launches in October. I think the vision I've always had for this business as a whole is we want to be able to help every home buyer. Like
Mm.
the passion we have and the dedication we have to buying properly with the right steps and the right guidance. Like I know for me, we want to be able to get to a point where Abodey is not only servicing how you buy, we will always be on the buyer side, by the way. We'll never be on the seller's side because we want to be unbiased. So we will only ever support purchasing transactions. We want to get to a point where we can service you from day one of purchasing to the end, then managing that asset and then handing off that asset when you want to buy your first investment, all the way down the line to you want to pass off that investment to your child. We really see ourselves as a life app
Wow.
to see how we can support someone's family for their entire journey with support, transaction history. You can monitor your performance, your portfolios. We really see a big vision over the next 5 to 10 years for Abodey.
Yeah, amazing. Okay. We have another question here, which is, I think you may have already covered, but they said is the app free? I think it's free to download.
Free to
And
download, but
yep.
I'll answer it by saying this. So what we realized is through the last 12 months on market, home buyers, really need that support. We initially
Mm.
went to market as a paid model, but because we've now come a long way with different products for professionals, we're in a position where we can actually offer the app for free. So
No,
we
wow.
haven't transitioned the platform to a free model just yet. So if
Mhm.
you go on the app today, you can download it free, but it's going to prompt you for payment when you start getting more than one match.
Mhm.
So that's why I said for tonight, it's free for everyone. While we're in this transition period, it will eventually be free over the next 2 months for everyone else.
Oh, wow. That's pretty exciting.
Yeah, it's very exciting. We're very proud to be
Yeah.
in that position because we knew, look, realestate.com is like the main tool for everyone. And we love that, because we are partnered with them and it has its purpose and place in market, of
Yeah.
course. But we see our solution as something that's really tailor-made to your position, and every single person can have a different experience with how they use it. And I just love that.
Yeah. Oh, amazing. All right, Joe. Well, look, there's a couple of questions left in here, but they are actually coming back to questions for me, which I didn't have a chance to answer before. So I might jump on to those before we get Scott to join. So the first one that I have is somebody's asking where are some of the next second win markets. So look, when I say second win markets, I think some of these markets that we're referring to, they're second win markets now, not necessarily what the next ones are. And those are areas like the Sunshine Coast in Queensland. This is a market that grew really, really strongly through that COVID period. Actually, probably before that, it really started to take off 2017, 2018 off the back of their brand new CBD that they were building in Maroochydore. They decommissioned an old golf course there and they started building a brand new CBD from the ground up. And price growth there was significant over the 5 years off the back of that announcement, all the job growth that came with that. Then naturally, it reached a peak where people weren't prepared to pay any more. It's flatlined for a little bit. Sippy Downs was one of the ones I showed before. It's actually part of the Sunny Coast, but a lot of that area is now starting to see this rampant increase in sales activity and price growth. One of the markets that I was looking at earlier today, you're looking at 5% growth in the last 3 months, and even north of 10% in the last 12 months. So we expect Sunshine Coast to be another second win market, which will be very exciting. Albury Wodonga is another one. Albury Wodonga is a market that we saw extremely good growth in the COVID years, plateaued, now starting to rise again. There's markets in Albury Wodonga that you can still buy houses, under 600,000 that are reasonably modern. They're the nice fixer upper. You don't have to do huge changes like knocking down walls and putting in second bathrooms, but they're cosmetic changes and really affordable, good rental yields with double-digit price growth in the last 12 months, and certainly in some markets, I believe we'll see that in the future too. Launceston is another market that we would call a second win market. A lot of the peninsula in Victoria would be a second win market. Areas like Byron Bay, another second win market. These are all markets you see a theme. Very, very strong growth. Then they start to plateau for a little bit and then they get their second win. So the exciting thing for investors with that is, you're not necessarily going into a Darwin market, which maybe hasn't performed for a long, long time. And you go, well, I can see that there's some rising sales activity. I can see some infrastructure, but I just don't have confidence because I haven't seen it before. And I can forgive some investors that are a little bit more conservative for thinking that. But it's really nice when you go into a secondary market and go, I've seen it happen before. Geelong, Ballarat, Bendigo, all markets that we believe have had that softening and about to take off. So hope that answers your question. That was Mary. Hope that answers your question, Mary. Another question that we have here. I want to buy my first home in Melbourne, but the auctions go too high. Can a buyer's agent help me? That might be one for you, Joe. I think that question may have come in just before I started, so it might have been for you.
Yeah, no problem. So look, auctions are a difficult one because it's not really, there's so much, I do so much content on this on my social media because I'm
Yeah.
not a fan of auction. But what I will say is the app is designed to help you do your due diligence before you go to auction. It's all about planning and strategy when you go to auction.
Yeah.
For like buyers advocates, we talk about it a lot with our buyers. I know when I was on the tools, it was my number one strategy discussion of how do you bid, the due diligence, the checking, like a lot of auction is about preparation. So doing a little bit of risk, having to pay for building and pest inspections, knowing you may not get it, doing your conveyancing and your Section 32 reviews if you're in Victoria or contract reviews. There's a few steps, but I'm happy to have a chat with anyone who just wants, guidance or support on how to get set up. But yes, the app will give you a discovery session with any of our buyers advocates. We back them. They're fantastic. They're all specializing in different parts of the market. So anyone you chat to, you can chat to for free, and just get that guidance before you go to auction. For the love of God, get guidance.
Especially at auction.
Yes.
And our next guest has got a lot of experience in this, and I'm sure he'll have some commentary around that as well. But before we let you go, Joe, one more question was that I couldn't find the Abodey app on the Google Play Store. Are you just Apple at this point, or?
No, we are Google Play as well. So you'll need to search Abodey AI. But before you
Ooh.
download it, just ensure that you fill out the form in the chat so I can give you premium access. Otherwise, it might be a bit harder for me to give it to you. So once you fill out the form, we will send you the steps on how to access that login and make sure that you're, set up and ready to go.
Yeah, amazing. All right. Well, Joe, thank you very much for your presentation. Obviously, really exciting to sort of see technology removing friction and giving buyers more clarity and confidence in their journey. But of course, even when the best data and tools, are around, you often still need to actually buy the property. So the deal itself is one of the biggest challenges. How do I actually secure that property? And our next guest has done that over 4,000 times. So I'm looking forward to having a chat with Scott. Joe, thank you so much for your time this evening. We'll let you go and have some dinner.
Okay. Thank you, guys. Fantastic. And all the best, everyone.
Good on you. All right. So welcoming our next guest, Scott Aggett from Green Shoots Property. Scott will show us what it takes to be truly buyer ready, from building the right brief to timing your offer to negotiating like a pro. Scott, welcome.
G'day, I'm going to come in now. Tim, how you doing?
I'm really good. How are you?
Good. I wasn't sure when you wanted to see my pretty face, but
Mate,
that's
anytime
fine.
we're happy to see your face. It gets the views. We know that.
Mate, I'm happy to be here. I'm happy to share, as much of this tired 30-year industry brain as much value as I can give tonight. And yeah, definitely answer any questions on auctions and things. I haven't written anything about auctions specifically today, but it's an easy one to unpack if people have got questions on that as well.
Amazing. Well, let's kick things off, mate. Looking forward to hear what you've got to say tonight.
Yeah, no worries. Well, I'm pretty keen to talk about how to find, analyze, negotiate, and transact because I don't see a huge amount of coaching or training or really simple tips for buyers that they can apply, at no cost. They can do it instantly and they can start their search on the right foot, Tim, because the average time it takes to buy a property in Australia is over 10 months. The average Australian consumer is missing 5 times before they stop the fight on property number 6. And then all the research out of the mortgage industry is, almost half of Australians that do buy a house after going through that, war zone come out of it with buyer's remorse. They either overpaid, compromised on the asset they initially set out to purchase, or a combination of the two of those things. So pretty keen to make sure that Australians are set off, with the right tools that they need to be able to analyze property the right way, to create opportunities, to reduce their buyer competition, and to create more favorable negotiation outcomes. And that's going to help people buy better, buy sooner, and have more confidence to act along the way and reduce stress through that process as well. So if you're happy for me to jump into it, I'm going to talk through each of those 4 key subheadings. So find, how to analyze, how to negotiate, and how to transact. And with this, I will just give you a little disclaimer. There is literally hours of content that I could talk about each of these steps. So this is very much a top line view on covering off on as many bases as I can tonight to give some value quickly. But if anyone wants to dig into this further, feel free to ask any questions, and I can unpack that with Tim, or I can do this separately off this forum if need be as well. So let's jump into find. Okay, so what I'm trying to look for when I'm finding a property is the why behind the sale. Now, the why behind the sale is the why of the vendor that's selling that property, and the best buyers can uncover that really fast. Whether it's a divorce, a financial stress, whether they're moving interstate for family or for a job, you've got to find that urgency. What is the key driver for them selling that property? Now, once you know that why, you know where the leverage sits. And this is really important because I come back to use those leverage points throughout my negotiation strategy. So to determine that why, you've got to ask a series of really good questions. So for me, it's those killer questions that I have on rinse and repeat in my brain. And these are things that you can write down, you can use in your vocab, and you can train yourself to think of these questions at the right time. But when you're dealing with agents, you want to be able to use these open-ended questions, and then you want to listen with intent, because a lot of the value is in the listening, not in the asking of the questions. Okay, so one of my favorite things to ask when I'm talking to an agent, properties just come on the market, for example, they might have a guide price, or in some states like Queensland, no guide price, or it might even just be contact agent. I want to get as much information out of that agent as I possibly can, so I can distill that why, find those key points, and then feed that back to the seller or the agent that you're negotiating against in a clean offer with the least amount of hurdles as possible. So it's going to make it really easy for that agent or seller to accept your offer, as long as the price is right, of course. So I might ask a question to start off with that starts like this: what buys it? Okay, and then I'm going to shut up. Now, what buys it does an incredible amount of heavy lifting for me. It sounds really, I guess, simple, but what it does when you ask that question is cut through all of the marketing talk from the agent. And the key is the quiet part afterwards, because what you'll find from agents is that they'll rush in to answer that question, and they potentially will tell you this big long-winded story, or they'll take their time and they'll unpack it and give you what's very likely going to be a more accurate guide to where the real finish line is. And it's in that listening that you can determine, okay, this agent's full of hot air, or this agent's genuinely going to be easier to deal with. And that really pre-frames how the negotiation moves forward for me. So if they don't answer what buys it, and it's quite often that I get hit with a brick wall at that point, I ask other questions. So I'm trying to circumnavigate that at all times to alleviate those initial turnaways, and then open that door to more communication. So I'm going to say questions like, okay, great, well, if you're not sure what buys it, what number's on the agency agreement? Okay, is your client ready to sell today? Yeah. I'm going to ask questions that come back the other way and say, what's the highest offer you've rejected? Okay, so what I'm trying to do is engage them and to try to pull out any data points that I possibly can, because the smartest negotiator isn't the one with the perfect answers, but it's the one asking the right questions. So if you can frame up those questions really nicely and you can ask them at the right time, you're going to gather a lot of those data points, and it's going to be a lot easier for you to move forward with speed. Now, with all these things, data points for me are important, even if it leads me to a dead end, because part of the reason why people are searching for over 10 months is that they go down these rabbit holes misled by agents because they don't ask these key questions. And an example of that might be, let's say it's offers over 800,000. So I will ask the agent what buys it, and the agent might say, well, we've just put it on the market. We'll get feedback from the market on Saturday. You're welcome to come along at the first open for inspection. Okay, great. Okay, well, I've just got to give my client a little bit more detail on this, because we're actually a long way down the road with another property. This would be our preference. We love this property, and I'll circle back to the word preference later in the talk. So would you think 810 buys at 815? Oh, mate, look, it's not going to be open until this Saturday. I'll get some feedback then. Well, I just want to try to really position the client in the right spot. So do you think it'll go more like 850, 870? Now, what I'm doing there is just baiting that agent, okay? And I'm trying to get anything on the hook there and any information. Now, what often happens in that situation, if I ask that question multiple times, I'll start to get some breakthrough. And the agent might say to me, look, mate, we've already had 815, we've got an 825 offer currently on the table. The vendor's counted at 860. 860 will get it done today. Somewhere between those two numbers is worth a shot, but at this point it's 860. Okay, great. So we've now gone from offers over 800 to the vendors at 860,000, maybe a little bit below that. Now, if you've only got 820,000, why bother spending the next 4 weeks chasing that property? So that's why those dead ends are just as important for me as door openers to what potentially may end up being a deal. So killer questions, really, really important. Now, we talked about baiting just then as well. So you got to float a number below your ceiling price. So you saw me just then go, 810, 815 or 850, 870 or whatever the word is that I just used. And the reason I'm doing that is just to sort of throw those numbers out there. I'm going to be able to roll those back in later if I want to, because I can talk about value and we'll get to that later on. But I want to try to float those numbers out there, typically below the ceiling that I'm prepared to go to, and then pause and see how that agent reacts. Now, it's the same as asking those key questions. You get a silence or a quick, pushback, or they chase you to engage. They're all telling you points that you can potentially leverage at a later stage. So really important to use that baiting to see if you can shortcut through to the finish line or a dead end. Now, what I do when I'm talking to an agent, if they don't give me a lot of information, is I go and leverage the network locally. So that might be a first stop of the second agent that's on the listing if there's two agents shown. It might be going to someone else within the same office to ask those questions. And what you'll find is that sometimes one of the other sales team members in the same office will tell you some information that the lead agent won't. They're trying to control the narrative. They're trying to keep everyone in that box, and they're trying to treat everyone like a sheep, because it's easy to sell the same line over and over again, create emotional interest, create competition, and then apply the blowtorch at the end in a negotiation. So that's how they get an emotional premium. So I try to do whatever I can to go around them and find out that information and then piece together that puzzle. So sometimes it's team members, other times it's competing listing agents, I should say, that work in the same market. So in this example where I worked in Surrey Hills, for example, in Sydney, when I had my Bell franchises, if I saw a property that was coming on with another agent and that other agent wouldn't give me any detail, I might ring one of my other competitors who would say, yeah, actually, we pitched for that listing and didn't get it. The vendor, they're quoting 1.8 million, but the vendor actually wants 2.5 million. The agents told them that they'll get them 2.5, which they won't. And they've had a whole heap of interest pre-market in it, and the best offer they've had is 1.92 or something like that. So you actually can get a lot of information out of the industry if you go and ask some of the competitors as well. And it's great feedback. So often I'll have those conversations, and I can do this right across the country when I don't know the agents. Pick up the phone, ask those questions, and very often I'll get told, oh, that house has got termite issues, or that house has got structural problems, or there's a tenant there that doesn't pay any rent, and there's a sitting tenant, and you're going to inherit that mess. Whatever that might be. So the agents are a really good database for me in terms of gathering information quickly and at no cost to alleviate risk. Okay. Some of the common buyer mistakes that you don't want to do is one of the key ones that used to happen to me when I was a sales agent is holding your cards close to your chest. Okay. The agents that are dealt with a brick wall when you're talking to a buyer and they just won't give you any information, won't open up, tend to walk away from those buyers and sell it to someone who is a good communicator. And it goes against what most people think is the logical way to deal with agents. They want to be very guarded with their information, but it all starts with your budget. So most buyers that I dealt with, and on average, an Australian real estate agent deals with 200 new buyers a week in a capital city market. So when they're meeting so many buyers, if you can't stand out from the pack, if you're playing games with them and lying to them about price, it's likely that they're not going to service you. They're looking for the next person that's going to sign an unconditional contract, and they're not interested in playing games. So they're looking for the easiest path to a sale for their listings. So disclose your maximum budget up front. And it's really important that you do that by also disclosing a 5 bullet point list of what your non-negotiables are. So it's really easy for any agent on the run to pick up your buyer brief and exactly understand what it is that you're looking for, and to know, most importantly, that it's actually achievable. Okay, so 5 ironclad non-negotiable bullet points of what you're looking for, and included in that is disclosing the price. Now, it's easy for me when I pick up the phone to start negotiating to change the conversation from what the budget is to the value of the home. When you do that, you'll never ever go back to talking about the budget again. Agents don't care, they'll move on, and then we're off to the races in terms of the negotiation starting. So make sure you do that buyer brief and make sure you send it every single week without fail until you've bought a property. So in my team, we send it every Tuesday morning. We send it on email. We've tested all 7 days of the week. We've tested SMS, phone calls, and emails. Email has the greatest cut through, but you've got to be really clearly defined with what you're looking for. The other trick to doing this really well is to make sure, as I said, it actually exists. So plug what you're looking for into the sold section and the buy section. Check what's sold in the last 30, 60, 90 days. Make sure what you're looking for actually exists. And if it doesn't, use the map search in the sold section to have a look at where those properties exist and play around with the filters. So if you're looking for a 5-bedroom house and there's no sales, well then look at a 4-bedroom house or look at a 3-bedroom house. If you're looking at a certain budget, well then do you need to increase your budget by 50 or 100 grand? Do you need to reduce your land size slightly? Do you need to take away one of the bathrooms that you've added into the mix as well? So play around with those filters so you know on day one that these properties are live targets in your area and you can achieve your brief very quickly when you start on that search. So there's a lot in the find section, but really important to start off on a really solid foundation. Let's move into analyze. So it's working out the truth from the noise, right? So I'm listening for patterns in those agent responses. So a fast, specific answer, as I said, often means there's genuine intent. A delay suggests they're stalling. You'll see agents that open up with an elaborate story. Typically, that means they're lying to you if they sort of want to try to cover their tracks and tell you there's a heaps of interest in the property and who these specific buyers are. So you learn a lot by asking those right questions and then listening for those patterns in the agent responses. And as I say, each is a really important data point in your strategy. When I'm talking to agents as well, we talked about sort of failing fast earlier, like getting to a dead end really quickly. I want to fail fast, and I usually use SMS to do it because SMS has the best cut through when I'm talking to agents. So when I'll use it is to say things to an agent like a blunt message. So, all right, you're quoting 1.2 for that home. We've got 1.275. Are we pissing in the wind? Am I wasting my time here? And the agents love that direct conversation because they don't want to deal with fluffy buyers and they don't really like dealing with emotional people that are going to waste their time. So when I get direct to the point and I get a lot of cut through with SMS, usually I get instant responses and I'll get black and white answers. Okay. And the reason that's important is if you ask them on phone, good luck tracking down most agents. And then when you do, they've got the ability to stall, think of the right answer, give you the full sales pitch, and really turn it around, and it becomes pressure on you and they can create competition out of thin air. If you give them time on email, they might be 3, 4, 5 hours. It's going to slow you down before you see a response. And by the time they get to that response, they're going to craft you the perfect message to, again, create competition and put pressure in reverse back on you. SMS does the opposite. I text you, I usually get an instant response, and then I get a quick answer. So it doesn't always work, but it's a really great free tool in the arsenal that will move things along at a much faster pace. And it removes the ability for those agents to take control. And I'm looking for any angle I possibly can to control that process. The next one is referring to what we discussed before, which is shifting the talk from budget to value. Really important for me that I reframe it like that for the reasons that I said earlier. Once I engage with that agent and I address the elephant in the room by saying to them, okay, great, well, you're quoting $1 million hypothetically. We've got 1.2 because we've been sending that to you every week on email. I won't address it as that, but I will say to the agent, listen, great, this is a property that's a high preference for them. We love the property. Never be negative. Be always super positive about the property because they get negativity all day. If you give them negativity, they'll think these people don't want to buy it. They're not serious. I'm going to go focus on someone who is a high-level communicator and positive. So I blow sunshine up their ass. I blow sunshine up the property's ass. And then I'll talk to the agent straight up in that first couple of sentences and say, yep, great. Look, it's well and truly within their budget. In fact, they actually could spend way more than this. They've got a crypto holding. They've got bank mum and dad. They've got, a property that they can sell overseas. They're going to, carve off a kidney, whatever. As soon as you address the fact that there's more money but they're not going to spend it on this property because it doesn't show value to them. And these are the reasons why. Bang, 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 bang. Now I talk about different properties and why they had more appeal to us. And it's very difficult for an agent to argue against value reasoning. If you start to use comparable sales evidence, they'll pull it apart because they should be a greater expert in their local market than you. If you start picking a fight on comparable sales, you'll lose almost every time. So I avoid talking direct comparables. I talk more about the feel of certain properties, the position they are within a particular part of the suburb that may or may not be more appealing for my customer, and then really hone in on those things that are very difficult to argue. They're very difficult metrics to quantify, right, for an agent to fight you on it. So try to pick it apart like that rather than being held accountable to your specific budget. When I'm analyzing property as well, I'm looking for market, context, not just that property data. So I want to know things like, DOM, days on market. I'm going to look at vendor discounting. I'm going to look on how long the inventory takes to get mopped up. The long-term and short-term stock metrics. I'm looking at buyer depth at auctions. All of these things are really important to me to understand, how much heat is going to be in a property at a certain price range. And also, where are the value pockets within the suburb? So go back to my old example of Surrey Hills in Sydney, where I worked. I could tell you that certain streets commanded a premium other locations within the same suburb. Now, if you were just looking at realestate.com in the sold section and you didn't have a clue about Surrey Hills, you could find comparable sales that looked very similar to the ones in the cheap area and the expensive area, but they're two vastly different things. And the prices may vary as much as 20 or 25% for effectively the same thing in the same suburb. So you've got to understand what's desirable in terms of, connections to transport, potentially school zones, aspect, noise, privacy, all of these different things that are going to impact the property prices. So look at that as a big picture. Don't just focus on the numbers, but focus on the soft data as well and understand what the market's doing and get that context. It's really, really important to work that out and to make sure that you can analyze these properties correctly. Now, when I'm looking at comparable sales, I'm also looking at competing listings as well. So I want to know how hard it is to replicate that asset. And that's one big thing that buyers in Australia don't understand how to really accurately do this. So by that, I mean, if you miss this opportunity right now that's in front of you to buy the 3-bedroom house in Surrey Hills for 1.6 million, how long is it going to be until you get another shot at those properties? And what's the market doing in terms of buyer depth and growth at that same time? You need to be able to price that, inability to replicate that asset into the final price in your deep analysis. And you need to understand the property condition as well so that you can put that into the mix. And when you're looking at comparable sales, you've got to pay particularly good attention, as I say, to where it is within the suburb, the quality of the fixtures and finishes, the size under roof. There's many different variables: parking, shade, natural light, privacy, proximity to transport I just mentioned. There's a lot of things like that. There's traffic flow. A lot of these things are overlooked by buyers, but it's going to be really important in pricing these properties accurately. And this is something I take deep pride in because any expert negotiator is a gun analyst. They can understand exactly where the market comparable evidence is. They can price it really accurately, and then they can control the negotiation based on where they know the value is going to sit and where they perceive the competition is going to be. And I'll get to that in a second in terms of where you start an offer, because that's very important to control how much competition you've got in the process. Let's move into negotiation. So speed is king to me. One of the favorite things I love saying when I'm doing any coaching or training is speed kills. It's paramount to your buying success. Okay, so it's not about rushing. It's moving decisively, and it's knocking out competition. It's reducing the vendor second guessing, and it's shortening risk windows. Okay, so speed is really important, but you've got to understand the buying process, the steps of the buying process, in what order that it takes. And then you've got to line your ducks up really nicely that you can alleviate any buyer competition by moving with speed through each of those steps. And this is something that is overlooked again by a lot of buyers that are emotional. And an example of this is a simple one. If a property comes on the market in my hood in Surrey Hills where I want to buy, and I've been watching that market for some time and I know how hard it's going to be to replicate that asset, I am not waiting to see that property 3 times at the advertised open for inspections on the first Saturday, the second Thursday, the third open for inspection on the next Saturday. By that time, they've got 10 other people that are emotionally connected to that home, and they're unlikely to sell it to me without going to auction or without engaging many other people that have potentially got deeper pockets to me. So when you see that property come up, push to get in there before the first open for inspection, get your building and pest inspection line up, have the contract reviewed, and put yourself in pole position to make a knockout punch offer before the competition have even had a chance to sleep on it. So it's not rushing, but it's being prepared that when you see the right property in the right location, that you can action that quickly. And I'd be so surprised, it shocked me that when I would deal with what I thought were highly qualified buyers when I was an estate agent, I'll be working with them for months. I'd find exactly the property that I perceived that they were looking for, having worked really closely with them. And they'd say something to me on a Monday when I ring them to say, I've got it off market or I've got it pre-market. Oh, great. Well, when's the first open for inspection? Or, well, okay, cool. What time? I can get there on Saturday and see it. I'm like, Saturday? Like, why wouldn't you want to see it in 5 minutes time? Leg it out of your office in the city, come and see it straight away and buy it right now. So when you talk like that to me as an agent, I'm like, okay, cool. They're clearly not ready to buy, right? They're not giving me the buying signal. So what am I going to do as an agent? I'm going to go sell it to somebody else, right? So you've got to put yourself in front of that queue because you're shooting yourself in the head by not taking that decisive action. So speed is really powerful. I used the word twice already that preference is what I want to drop into the conversation. Preference is an unbelievably big word for me in negotiation. Now, the reason why I love this is because it says to an agent, hey, I've got other options. This isn't the only other property that we're considering. However, we want to go for this property. It's our preference. We're going to push play and go hard at it, exhaust that option, and then move on. But you can't keep us in the dogfight for too long. If you don't take what we perceive as a good offer, we're out and gone. And that reverses the fear of loss. It puts pressure back on the vendor via the agent. The agent's going to feed that dialogue back to their seller, and it puts you in more of a control position when you're negotiating against agents. So preference is a power word for me. When you start negotiations with an agent as well, and you get a little further into the process, you can expect 3 shots from them to try to close you. And by that, I mean, let's say we get an offer in at 1.1 million. The agent's saying that they want 1.14, you're 40 grand apart, but you don't want to pay any more for it. You feel that's the right value. The agent's going to come at you 3 separate times on average to try to get you to pay more money. So even when you think you're right at the pointy end of a negotiation, just expect it to come, that the agent in 3 different ways is going to come at you to get you to pay more money. Typically, it's going to be, they're going to create competition out of thin air. So there's a threat that you're going to have, a buyer right up behind you that's going to pay more. They're going to talk about the vendor potentially not needing to sell and try to pull it away from you. And then they're going to harp on potentially your fear of loss in terms of, look, you've been looking for ages. Let's just pull the finger out and get it done. So expect those 3. And for me, I like to think of it like, plant that seed in your head early that this is going to happen. And when it happens, welcome it. Say, great, I've been waiting for you, my old friend. Here you are. This is the first, this is the second, this is the third, let's go. So then you don't get overwhelmed by it. You're not emotional about it. You're absolutely expecting it to happen. Any good sales agent will push you to do that as well. Now, one of the other things that we can do, and I won't spend too much time on this so I don't overrun my time slot here, is anchoring. And anchoring is probably another whole 30-minute conversation. But you heard me earlier say that we've got an interest in another property when I talked about asking what buys it. So typically when you anchor to another property, it's to create competition and do the same thing of reversing the fear of loss to the seller. And I don't use this ploy often, but it does come into our repertoire and it is very powerful if it's used correctly. But to anchor to a property, you've got to do it really early in the play. So if I'm ringing you as an agent, it's likely going to be this on the first call. Hey, it's Scott Aggett from Green Shoots Property. I've got a client that's looking at your property in 12 Smith Street. Love the property. It's great. It's actually in their preferred part of town. They love that spot. The photos look great. Geez, you've done a wonderful job marketing that property. And geez, you're a really good agent. It's lovely to see you control the market there, blah, blah, blah. Now, listen, I've only got a little bit of time. I just need to move on this really quickly. I know you've just listed it, but we're actually a week down the line on a property under offer off market. Now, the agent is saying that it's Monday morning now, that if we don't exchange by close of business Wednesday afternoon, they're going to put that on the open market. And obviously, we don't want to do this. Our clients have been looking for a month or two. They love that property, but this is their preference to buy it if we can. So where do I need to position them to buy it, right? So that's how I start up. That's one of my questions. What buys it? Where do I need to position them? Is the vendor actually ready to sell today, or do they need more time? And the agents in that point will tell us often, mate, they're actually not ready. I've overcooked this to win the listing, or they're in la land on price, and I'm going to need to get a couple of weeks worth of buyer inspections to bring them back to reality. So you've got to ask those key questions, but by anchoring at that point and not making a big deal out of it, I'm then going to push for early access to see that property, and ideally getting there before anyone else has seen it, before they open for inspection that they've got advertised. And then I'm going to pick the phone up and say, great, thanks so much for showing me through, Mr. or Mrs. Agent. As I thought, they love your property. With your permission, I'm just going to make you one knockout punch. And you know why? Because I've obviously got time pressure on this other property. So we see value at X. Let's go, right? So what I've done there is I've just shrunk the time frame of buying that property. I've got rid of all my buyer competition, and I've got a clear shot on goal against a vendor who knows that if they don't accept my offer, I won't be here tomorrow. Okay, so that is a way of bringing this process to the surface and then having a clean shot at it. Now, I don't always win, of course. Like, it's all about repetition and shots on goal, but I've created an opportunity that no one else has got. And that's what you're paying for with an expert negotiator, is to find those opportunities to create that no one else is going to get, right? And that's where the value in what I do, having done this north of 4,000 times in terms of property deals, gives me that confidence to be able to have those conversations and control the narrative to the best of my ability. One of the other things I do as well is I write what the agents can't say. Okay, so what I mean by that is an agent has got a very delicate relationship with their seller. They're juggling much buyer interest typically, plus the vendor's expectations at the same time. The agent doesn't want to shoot themselves in the foot and ruin that relationship by saying the harsh real truth, the harsh light of day. So what I do when I write offers or feedback is I'll often put it on email, or I'll put it on SMS, when I'm making that final offer, and I'll say all the things that the agent can't say. I'll effectively do their job for them, and I'll help close that vendor without making them look bad. So I'll blow sunshine up the agent. They've done a great job marketing the home and presenting it. They've been wonderful to help us get to this point where we're at today. And then I'm going to say all the things about the property that they can't say to that seller. And that's doing the heavy lifting for them, and that helps me close a ton of deals. And the agents love it because they'll simply just copy and paste those messages or forward them on. So that's a good thing. Last thing in this negotiation stage very quickly is, when I've done my analysis, I want to determine typically two numbers. One is what it's really worth, so market value. And buyers find it very difficult to actually agree what market value is. They're often well short of that number. So once you determine market value, the second thing often is, what's your target price? What do you actually want to spend on that property? And then when I make my first offer, it's typically 95 to 97% of the way towards my end target price. Now, it's not a rule of thumb for every negotiation, because I would have asked all those key questions to collect the data. But when I know when that data matches up, the reason why I want to go at those numbers, 95 to 97%, is because I want to either buy it on my first offer, or I want to engage the seller because I'm that close and get a counter offer, which I can close it in one more step if we wish to go any further. Now, if you start too low, you get turned away and get a no, and you don't learn anything about the seller's motivation. And then you've got to start bidding against yourself. Now, if you start bidding against yourself, the agent knows you're emotionally invested, and then all of your previous dialogue goes out the window, and then you just start having to increase against yourself. And it's very likely the agent will start saying no to your increased offers because they know how heavily invested in that process you are. So get really specific about where you start and finish your offers. And let's finish up in Transact now. Guys, I'll probably have another 5 minutes or so. Tim, if you want to come and ask any questions, but transacting for me is, getting clarity around trust with the agent. It's, the line that I would use is secrecy creates risks. And I referenced this earlier in terms of agents. You want to build trust with them. You want to build rapport, and you want to have your cards out on the table as best you can so that they can work with you to get a deal done. So what I do in that instance when I'm going to wrap up a deal is tell them exactly what I'm going to do, and then follow through and do it absolutely step by step. So I might say, Tim, Thanks very much for the opportunity. I want to make an offer on this property. It's Tuesday morning. I'm going to get the building and pest done tomorrow afternoon at 4. I'll have the contract reviewed by the time we've got the verbal back from the building and pest guy, and we'll be ready to make an unconditional contract on Thursday. Does that timeline work for you, Tim? Yep. Okay, great. Yeah, great. We're on. All right, I'll see you on Thursday. Or I'll talk to you Wednesday afternoon and give you a catch up, and then we'll do it on Thursday. So I want to basically tie the agent into it, but I'm also holding my own self accountable and my client accountable, and the agents love it because they want to deal with you because you're absolutely forthright and you're going to be a man of your word or a woman of your word and do the job for them. Next for me is rapport. I think it's an absolute weapon in negotiation. So I try to build as much rapport with these agents. And by that, the easiest way to explain it is you've got to get on the agent's actual level. So if it's a grandma agent, you might be talking about the grandkids or family. If it's a young hotshot agent in a capital city market, you might be talking whatever their language is. But you've got to find that common ground so that they want to deal with you, and you've got to make it fun or engaging. So I'm smiling when I'm talking to them. I'm cracking jokes. I want them to talk to me and open up because I want them to share with me more than what they're going to share with the next buyer. And that's an opportunity for me to control the process. I think, Tim, I've got a few more, but do you want me to wrap it up now? I'm conscious of your time.
No, you're fine. We've got a couple more minutes. If you've got I know I've seen a couple more notes, so we've got a few questions there, but give yourself another couple of minutes and I've got a few good questions for you too.
Sure, easy, cool. Well then, this is a harder one to do, but it's a really important one in terms of that final transaction, and it's asking for the final right of refusal. So let's say, for example, a property is going to auction, it's come on the market, the first week, everyone lines up to see the property, and you know it's going to be something that you want to buy. So often what I'll say to the agent is, hey, we know we're going to want to buy this property. It's right in the location that we want. It all lines up. These guys, my clients, are ready to go. What I want to do is, with your permission, Tim, I want to make a starting offer. I want to make a knockout offer. And of course, I've asked all the questions to establish that the seller's actually ready to sell. Otherwise, this is a waste of time. But once I've established that, I'm asking Tim's permission as the agent to start the process off and put a top offer on the table. And I also suggest to Tim that you're welcome to disclose my offer to everybody else. So what I'm saying is, I've got empathy for you. I've sat in your chair. I know your job's to get the best possible price you can for your seller. I'm going to help bring this whole thing to a head much faster than what it would be and save you a lot of time. I just want to ask you one favor though, Tim. If I start the process and I come in with a knockout punch, and you can disclose that offer to everyone else, when you run that process and you tell me that it's 4 o'clock tomorrow afternoon, sealed bids, best and final bids, can you ring me at 5 minutes to 4, tell me what the highest bid is, and give me the last right of refusal because I started the process? And you'll be surprised how many agents say yes, because what I say to them is, Tim, you've got nothing to lose here. I'm either going to beat the best offer you've got and your seller's going to get a better result, or I'm going to say to you openly, I can't beat that, Tim, wrap it up. That's a great deal. Yeah. So, are you happy for me to start that process? A lot of agents, probably more than half of the agents we ask, give me that final right of refusal. Everybody else stresses and bids against himself in the dark. I get a phone call at 5 to 4, and if it's within our powers to pay it, we pay it. If it's within, it's over the budget, we walk away, obviously. So the final right of refusal is really important. You've got to know as well and educate yourself on what the process is, as we mentioned earlier, in the buying steps, but also what the options are for you. So how do you circumnavigate price and use terms to your ability? So that might be shorter settlement, longer settlement, smaller deposit, bigger deposit, release of deposit, might be a lease back to the sellers. It might be inclusions or exclusions. There's so many different things that you can use as a negotiation piece that isn't money. And if you don't know what they are, you're going to just keep putting more money on the table, and an agent will extract extra $5, $10, $15, $20,000 out of you very, very easily. So make sure you know what options you've got on the table, because this is one of life's biggest financial outlays. And if you don't know how to do it, outsource it to somebody who does, because it's going to cost you a lot of money otherwise. And the last one for me to finish on, Tim, is a lot of buyers agents that I've spoken to over the years will race to get a property under contract, typically conditionally, and then they'll do a building and pest report that the contract is subject to a satisfactory report. They'll then use the contents of that report to renegotiate price with the agent. Now, if that has to happen in that order, fine, there's nothing you can do about it if you've got extreme buyer competition. But if you've got a choice, that's the wrong way to do it. And I'll tell you why. Having sat in the agent chair for 23 years, once I know that I've got you conditionally exchanged, your barrier drops. Yep. it absolutely drops. Everybody feels like they've crossed the finish line, the game's over, the job's done. So when you turn around 4 days later and say to me, oh, there's a hole in the wall and the gutter's falling down and the fence is in, can I have 20 grand off? I'm going to say politely, jog on. Because I know you're emotionally connected to that property and you're not going to walk away from it. And if you do, you might want 5 grand to settle instead of what normally would cost me 20 grand. The right way to do it for me is to do it up front and then use that building and pest, the contents of that as a weapon in your negotiation. Highlight those negative points and then use those to arrive at where you see value. So that's a really key one that I think I see butchered by inexperienced buyers agents that will make a big difference to buyers.
I'd agree with that. I think the only challenge with that in some markets is you could be quite easily paying for building and pests, and in hot markets you could still end up losing it. So it becomes a very expensive exercise. It's good at auction, obviously. When there's probably one that's already been done, you can buy it at a bit of a discount. But sometimes when you're buying them, you could be spending a couple of $1,000s on building and pests before you win the deal.
Yes, so we're very selective in terms of the properties that we'll do that on, and we make sure we're really committed to buying that property in terms of we've got a very good idea of the condition of it before we waste money on a building and pest when we think we might potentially have to walk away. But it's also a sunk cost of doing business, because if you spend, if it costs you, let's say you do, I'm not saying you would do it 4 times. I think the average for us is probably just over 1 per customer deal. But if you did 4 of them and we go to the extreme end, and it costs you $2,000. Well, as I've just highlighted then if there's anything wrong in the report, you're going to give up way more than $2,000 later anyway, like probably 4 days later. So, it's a sunk cost for doing business.
Look, I think one of the big takeaways with the point you raise here, though, is it comes back to the ask for permission later. It's almost like you get the deal in bed. We've got contracts exchanged. It's a lot easier to ask for permission than it is for forgiveness.
Yep.
So what I would do is say, even on finance clause, and go, listen, I probably need 21 days. Go in at 14. If you still need help at 14, we'll just apply for an extension. I'm pretty sure you're going to get it.
Yep.
So there's things like that I think you're absolutely right. What you want to do is cater to that the vendor's agent's needs, or sorry, the listing agent's needs, and say, I know you want to sell this once. You do it with me, you'll only sell it once. And it's filling them full of confidence. And the tips that you've given tonight, I feel like there's probably not enough paper on most people's pads tonight to collect it all. So one of the things I'm going to do is actually throw this into one of our AI note takers and actually create some notes for people for when we send out the recording, because there's some absolute gold in there, Scott.
Good. I'm glad there's some value for people.
Really good, mate. And not only value, but some questions. I'm going to lead things off. I had one question that I had that I jotted down on here. Obviously, through your through your experience, you can't really underestimate the preparation that people need to make. So what I was going to say is, through your experience, how much have you seen people walk away from deals or lose deals just purely because they haven't put in the preparation, versus people that have gone, you know what, I've been preparing for this, I know exactly what I want, and because of that preparation, they're winning? It's got to be huge, doesn't it?
Yeah, it's the vast majority of buyer offers that we would have seen is people that just don't have a clue what's coming next. They're racing into it, they're highly emotional, or they're just way too relaxed about it and just get mowed down and pushed around by agents. So really important, and I don't think it takes much as well. Like there's a light amount of research that you need to do to be prepared. One of the things I didn't talk about is how you can train yourself to really understand the dynamics in a market as well. And I think people overestimate how long that takes. I think if you really study a market in 4 to 8 weeks, you can master it. You got to get dialed in on the issues that we said: comparable sales, competing listings, the rate of which stock comes on, auction clearance rates, the buyer depth, and where the value pockets are within a suburb. But I used to say to my clients all the time that don't make an offer until you've physically inspected 50 properties. And the reality, the harsh light of day in Australia, is people are too lazy. They won't even go and see 10 or 15 open for inspections. So you've got to do the hard yards. But if you can do that over a 4 to 8 week period, you can master a suburb really quickly, and you can buy so much better and so much more confidently.
Yeah, I'd agree. All right, let's pile into some questions. So we've got the first one is from Sally. She says, do the days on market for the area change your strategy at all?
Yes. Yep. But it depends on stock on market, and then the total inventory, and then the buyer depth as well. So, it can be misleading sometimes in terms of you can't just rely on, say it's saying it's 67 days on market. Another market that's red hot might be 29 days on market. It's in an opportune space under 30 days in total. But there still might be tons of buyers chasing the homes at the 67-day mark because, you know, those homes are really difficult to replicate. So that might sell in 24 minutes. Yeah, not 67 days. So you've got to know the stock, but it does come into play. Like I'm watching all of those statistics as well to see if I can piece together that whole puzzle.
I think that comes down to the preparation, is actually understanding that, you know, you need to know all of these tactics that you've used tonight, but part of it is knowing when to action them, which ones to action at the right time.
Yeah, and that they all correlate, right? They all join together at some point.
Yeah. The next one is, do you like to put expiry dates or timestamps on your offer?
Only the way that I structured it when I did the anchor property is the only time that I'll ever put a natural timeline on it. And really that's me saying, hey, don't shoot the messenger. It's not me. The other agent's putting me under extreme pressure that it's got to be done by close of business Wednesday. But I would never make an offer that says, hey, it's got to be done by 6 o'clock tonight, or we're withdrawing our offer. When I was an agent, that was a red flag to a bull. If I had two people that are a similar price, I would ensure that the second buyer ended up getting into the lead and bought that property and mowed you down. Yeah, if you told me, you know, it has to be done by 6 o'clock, otherwise we're out, I'd say, cool, jog on straight away. It's just, you have to pick your battles, and aggressively trying to dominate a real estate agent who's typically full of ego. Certainly I was in my early 20s and 30s. You know, I thought, you know, bulletproof, you're earning lots of money and you're in control of these circumstances. So there's a lot of confidence from agents if they're decent agents. And I think it's just the wrong way to structure it. It's a really interesting thing, actually. When I first left in 2016, when I sold my Bell offices, and I wanted to build the negotiation service, which became Hello House after that, I was originally building the business around women, single women, because I would build great rapport with women buyers, and I'd be working with them for a number of months. And then very often, so often that it was really obvious to me when I left the business, you would go to a negotiation, and instead of the woman turning up that you've got rapport with, the boyfriend or the brother or the husband or the male friend or whatever would pick up the phone, and almost always they'd come in with that sledgehammer approach, and almost always it'd be at their peril. And it's just the women were way better negotiators than they gave themselves credit for. And the men just have this tactic that they want to dominate, and it just doesn't work in negotiation.
Yeah, and often get into the party late and probably don't have as much preparation as the woman did in the first place.
Yeah.
Okay, probably got time for one more question. That's a good one. Can I offer with no building and pest clause and get the building and pest done during the cooling off? Is that acceptable?
Sure. Yeah, you can make it satisfactory to your building and pest. You can make it satisfactory to another inspection, satisfactory to your conveyancer reviewing the contract, to a finance clause. Basically, you can negotiate anything into it. The only thing I would say to you to be careful of from a negotiation perspective is, whilst almost anything can be negotiated in to be a condition in a contract, the more conditions you put in, or the harder you make it for the seller to accept it, the lower the chance you've got of getting your offer across the line, or the more you're going to pay for it, or both. Yep. So it's actually the other way around. I go out of my way to eliminate all the conditions to make my offer as clean as possible, because what we didn't talk about before, about what I said about doing the building and pest first, it's not just about using that to your negotiation advantage on the price. It's also to make me unconditional. So when I'm unconditional, my offer is so much better than everybody else's that's going in there conditionally. So you'll end up saving 5, 10, 15, 20 grand or more. And they'll just choose you, even if you're at the same price and it's competitive, whatever, you'll end up winning just because the contract terms are better. So eliminate as many of those terms as you can.
I'd agree. Well, Scott, very much appreciate your time tonight, full of wisdom as always. So I really appreciate you sharing all of that with our guests this evening. As a bit of a reminder for everybody, we will be sending out a recording of this webinar tomorrow, along with links to connect with our speakers. I think we actually have a link in the chat, which Chris has just put in, if anyone would like to have a chat with Scott. And again, a massive thank you to Joe Agresta from Abodey tonight for joining us. And with that, I'm going to let everybody go off and have some dinner, because I'm starving myself.
Nice one. Thanks, Tim.
Scott, thanks so much. Joe, appreciate your time. And everybody, we look forward to seeing you on the next one. Have a good evening.
Thanks, Tim. Thanks, everyone.
See you guys.